have seen many progress in the last years, but still, of course, challenges remain, and I like to group them into three overarching topics. The first are operational challenges, relating certainly to the lack of reliable, standardized, comprehensive ESG data to implement sustainable strategies. Just persisting lack of unified definitions or standards on sustainable finance, but also to different regulatory or supervisory approaches applied by NCAs when supervising compliance with SFDR rules. And especially the third one is really presenting a challenge for asset managers operating cross-border. So they have to deal with expectations from different NCAs and try to put it together into one consistent concept of sustainable finance and investments they apply in practice. That's the first part. The second part are certainly greenwashing allegations, or rather greenwashing risk that is present in the market. We have seen many of such allegations in the last half of 2022, when asset managers were busy with implementing SFDR level 2, and they had to adjust certain concepts that went along with sometimes reclassifications of products from Article 9 to Article 8 and backwards. So there was a lot of confusion. And asset managers were accused of having been greenwashing or being actually greenwashing, but in many cases these allegations go down to actually different concepts of sustainability, different expectations that investors have or NGOs have when talking about sustainable finance. And since we do not have a common standard, it's really difficult to rebut such allegations. And the third challenge, and I think this is actually the most worrying one, as what is happening currently at the point of sale. We have seen implementation of sustainability preferences under MiFID and IDD in August last year. And since then, investors' interest in sustainable products seems to have decreased, because obviously investors struggle with understanding of the sustainability characteristics they are presented with, and distributors are not really able to explain them properly, given that we still lack common definitions. And for example, that the concept of sustainable investments, that is a main feature of sustainable product, is implemented very divergently in the market. So distributors cannot really compare products, and we are really experiencing that investors become cautious and perhaps less confident in sustainable investments. Yes, just perhaps picking up on what I told you before, we need a system, a product classification system that is investor-centric and builds upon the needs of retail investors, but also the level of understanding retail investors have, and perhaps the most common distinctions in terms of sustainability concepts that can be communicated to retail investors. So we are very much in favor of having a fundamental discussion about SFDR. And even though the industry has put so much effort and so much money into implementation of the current system, we are very open to have it evolve. But as I said, it must be very much focused on the needs of retail investors. So we need a clear connection to MiFID and IDD preferences. SFDR review and MiFID IDD review must go hand in hand. And we definitely need thorough consumer testing to accompany these reforms. And for the new system, we would also wish to build upon the elements of the current SFDR that have proven useful in practice. And in these terms, we like to refer to the PI indicators that our members think they are objective measures of sustainability factors and can be, for example, used for implementing transition-focused investment strategies. That should be definitely part of the new system. And the third wish we would like to communicate is that the new system would need to be asset class neutral. It should not be focused on listed equities like the current SFDR, but should really embrace different asset classes and also multi-asset strategies. And I think this will be the biggest challenge, to have a product classification system that is robust enough and provides certain minimum standards in terms of sustainability, but is still flexible enough in order to incorporate all different strategies and to remain open for innovation. I would like to emphasize that financial institution and the financial sector is definitely part of the solution in terms of sustainable finance, but it cannot be made the sole solution. So we are part of a bigger ecosystem, and given the ambitious goals that we have in terms of transforming the whole economy to a climate neutral world until 2050, I think all the players need to be taken along, and we must accelerate measures. We must not say it's enough, because I was really worried when listening to regulators saying that, the wave of regulation on sustainable finance is over, and now it's for the financial sector to pick up and to make the change. And actually, we can play our part, but we cannot do it without proper incentives and proper pathways for the whole industry to transition and to make the change real. So, as I like to say, the sustainability cart won't move on its own. We need the horses to pull it. We need proper incentives and risk mitigating measures also for the industry.